So you're interested in making some sweet moolah. If you are, congratulations, you've come to the right channel. So today we're going to be discussing high growth funds. What exactly is a high growth fund? Well, high growth funds invest mainly in growth assets and are designed for investors with high tolerance for risk, and also those who are seeking long-term capital growth. High growth funds are specifically designed for those individuals who have a high risk tolerance. If you do not have a high risk tolerance, then a high growth fund wouldn't be for you. But if you are feeling froggy and you're ready to jump, then this video is for you. Before we get started, a lot of the viewers on my channel are not yet subscribed. So if you found the content on this video or for the videos I've previously posted to be helpful along your millionaire journey, please stop what you're doing right now and hit that subscribe button, as it will greatly help this channel to grow and I would really appreciate it. So fund number one, and that is going to be the Charles Schwab US Large Cap Growth ETF, ticker symbol SCHG. Now this particular fund has 228 holdings. It invests in 228 companies. Its current expense ratio is 0.04%. and its year-to-date returns are 18.76%. Look, you gotta love Charles Schwab's. It is one of the top 3 highly recommended brokers that you should be investing in if you're looking to make those sweet gains and moolah. Now let's go into the breakdown for this particular fund. Its 1-year return, 44.47%. 3-year return, 25.48%. And its 10-year return is 17.71%. The top 10 holdings for this particular fund makes up 52% of its entire holdings. As to be expected, it leans heavily towards the technology sector. This is a great fund for you Charles Schwab's investors to be investing in if you have a high risk tolerance and you're looking to make those fast, aggressive growth. For those of you who consider yourselves to be high risk investors, put down in the comments below and say, I am ready to make this sweet moolah. The second fund is going to be Vanguard's Growth ETF, ticker symbol VUG, and its index fund equivalent is VIGAX. It invests in 287 companies, and its current expense ratio is 0.04%. Now its year-to-date holdings is 18.32%, but let's go into the breakdown. Its 1-year returns is 42.85%. 3-year return, 23.8%, and its 10-year return is 17.47%. Now, its top 10 holdings makes up about 45% of all of its holdings. And if you're a Boglehead or a Vanguard investor, this is one that you probably have heard about. It's a great fund for those who have high risk tolerance and you're looking to make those aggressive returns. If you like what you're seeing so far in this video, please do not forget to gently tap the like button, as it greatly helps this channel to grow. Fund number 3 is actually one that you've probably heard of but didn't know what it was, but it is a very popular fund to invest in amongst those investors who are looking to make high growth. The Invesco QQQ Trust ETF, ticker symbol, as you know, QQQ. Now this one is a little bit different, being that it invests in 100 companies, but of those 100 companies, it compiles of both international as well as domestic funds. Now its expense ratio is a little bit higher, but nothing to be too alarmed about, and it comes in at 0.20%. Now its year-to-date holdings are 17.81%, but let's go into the breakdown. Now its 1-year return is 43.96%. Its 3-year return is 28.29%, and its 10-year returns is 21.25%. Now its top 10 holdings for this one makes up 55% of its total holdings. And again, not to be surprised, but it consists of 48% of large cap technology stock. So for those of you who have been wanting a great fund to invest in, generally in like a Charles Schwab's, even a Fidelity, or even if you're investing in a robo-advisor, QQQ is definitely one that comes highly, highly recommended. Hey, listen, there's something I wanted to share with you guys that I feel very, very guilty about, but I don't think that I should. I work out fairly often, as a matter of fact, every day. I run 3 times a week, sometimes 4. Yesterday, I ate 4 Krispy Kreme donuts, 2 glazed and 2 cream filled. Should I really be feeling guilty right now? Put down in the comments below. All right, fund number 4 is another Vanguard fund, very popular as well, and that is Vanguard's Mega Cap Growth ETF, the ticker symbol MGK. No, not the rapper, this MGK. And its index fund equivalent ticker symbol is going to be VMGAX. Now for this one, you'll also oftentimes hear of the same fund, but the small and mid cap growth funds, which are great as well. And it's also something that you can add into a core holding. Those ticker symbols are, for the small cap, VBK or VSGAX, and for the mid cap, VOT plus VMGMX. So those are some that you should look into as well. I'll link it down in the descriptions below. Now the Vanguard Mega Cap Growth invests in almost 700 companies, so 698 companies. Its expense ratio is going to be 0.07%, and its year-to-date returns are 19.14%. But let's go into the breakdown. Its 1-year return is currently 42.38%. Its 3-year return, 25.82%, and its 10-year return, 18.14%. Its top 10 holdings comprise of 54% of its entire holdings. It's 61% invested in the technology sector, but overall, it's a very good fund that you should be looking at if you're a Vanguard investor and you want that high growth, mega cap growth, all right? So it's actually speaking of the most successful companies in the United States that are very, very high in risk, but also high reward. Last but not least, we're gonna go into fund number 5, but it actually comprises of 2 funds, and I'll explain why as this video progresses. But that's going to be a fund from the one and only Fidelity, all right? Fidelity is a great brokerage account for you to open with if you're serious about investing. Fidelity's Blue Chip Growth Index Fund, ticker symbol FBGRX. Now, FBGRX invests in nearly 600 companies. It's about 561 to be exact. Its expense ratio, however, is quite significant, and it's at 0.79%, all right? That's why I've included a second fund if you feel as though the expense ratio for this one is too high for your liking. And we're gonna go over that here in a second, but its year-to-date return, 14.72%. Let's go into the breakdown. 1-year return, 33.81%. 3-year return, 27.77%. And its 10-year return, 22.27%. One of the very few funds that manages to continue at 20% or above after 10 years. Its top 10 holdings makes up about 43%. Now this one in particular is about 36% invested in tech. However, about 27% invested in the consumer field, all right? But now let's check out the other fund, which is also a Fidelity fund, but this one is going to be Fidelity's Large Cap Growth Index Fund, ticker symbol FSPGX. Now the returns for these two are a little bit similar, even though the blue chip growth outperforms slightly. But this one invests in 1,182 companies, and its expense ratio is only 0.03%. Its year-to-date return is 14.30%. Now, again, I'm gonna link in the descriptions below all of the funds that I've spoke about in this video, so you can go ahead and look for yourself to see the breakdowns, performance, holdings, so on and so forth. Now, the question would be, hey, why would I invest in the blue chip growth stock for Fidelity over the large cap growth stock? Simple. The blue chip growth stock grows quicker and it brings you more returns. But you will pay for it in these regards because the expense ratio is a lot higher. And there you have it, guys. The 5, or should I say 6 funds that you should look at investing in if your risk tolerance is very high and you're looking at making that high growth to make that sweet moolah. If you've enjoyed watching this video, please hit the like button for the YouTube algorithm, but more importantly, don't forget to subscribe. As always, I want to thank the men and women who have served and continue to serve this great country of ours. I greatly appreciate you all. So until the next video, guys, let's talk finances then.